On this morning's Ag Issues program, a pleasure as always to bring on to the program Roger McEowen, Professor of Agricultural Law and Taxation at the Washburn University School of Law, as he joins us on the program this morning. Roger, good morning. How are you?
Good morning to you, Greg. I'm just fine, thanks.
Well, let's get to it. As always, a lot to discuss. And first thing we're going to talk about is accounting, in this case for agriculture. And as we well know, helps out to report income and deducts business-related expenses. But specifically looking at farmland leases and also farm program benefits as well.
Yeah, Greg, this is an interesting case, came out of Arkansas, and it deals with something that probably is kind of unique to talk about on this show because it's pretty technical, and that's the particular accounting methods. And most farmers are on the cash method of accounting, and so when you incur an expense in that year, you deduct the expense. When you pay that in that year, you take the deduction. And when you receive income in the year you receive it, that's when you report it. Now, most farmers will use that method. It's simple, it's straightforward. Some will use the accrual method, which is when an expense accrues, that's when you claim the deduction, not necessarily when it's paid. And that can work particularly good for some larger operations, particularly cattle feeding operations, for instance. But you can't change your method of accounting without getting IRS permission, unless your underlying facts have changed. And that's what really was at issue in this instance. And it involved something pretty unique here, and that was Farm Service Agency base acres. Now, what happened was you had this company. They're not a farming operation. In fact, they run car dealerships, but they owned a bunch of farmland. They leased it all out, and it was under, in essence, cash leases. And so there's another problem here, and I'll get to that in a moment. So they lease it all out, and they weren't deducting or amortizing the base acres, which a lot of farmers may not realize that there's actually support for being able to do that, as well as government allotments and quotas. There's a value to that that adds value to the land, and so the theory is I should be able to get a tax deduction for that. Well, that's another story for another day. There is some authority that would allow you to do that. And I think what happened here was the taxpayers didn't realize you could do it, and then later realized you could. So they hadn't claimed any deduction for depreciation or amortization on the base acres that their tenants were farming, but they owned the land. And then starting in 2009, several years down the road, just started doing it on the tax return. Well, that's the point here. You can't just do that. That's a change in your accounting method, and the IRS has to approve that. And if you don't get proper approval, you don't fill out the appropriate form, request approval, and get their blessing for it, they can hit you with penalties, and they're going to come back in and they're going to make what we call a 481 adjustment. They're going to adjust your income for those years where you made the change, and your tax bill is probably going to go up significantly. Well, that's what happened here. And the end result was it ended up costing the landowner about $250,000 in additional tax and penalties. The bigger problem was they shouldn't have done this at all. They're not entitled to any deduction associated with the base acres because they were cash leasing the land. That means they're not a farmer. If you're a cash rent landlord, you're not a farmer in the eyes of the IRS. You are in a rental activity, and so you're not entitled to claim any business-related deductions associated with that real estate. So this case was messed up from the start. This should have never gotten to the tax court. This was just bad all the way around. They were going to lose the case. They did. It was Judge Paris that issued the opinion. She was the only one on the tax court that really has any ag background, and now she's retired, but she did handle this case. And it just is a good lesson that you can't just simply change your method of accounting without IRS approval. And if you are a cash rent landlord, you can't claim any business associated deductions associated with your farming activity because you're not in a farming activity, you're in a rental activity.
As we move on, and another part of this coming up, and we've got pheasant season coming up as well, involves hunting. In this case, hunting use agreements and recreational entrants, but the legal issues that go with it, Roger. And obviously, or I would think one of the top things about building a solid hunting use agreement, the property interest that is involved in this.
Yeah, that's right. And by the way, you don't need a hunting use agreement this fall in Kansas for turkeys because that season has been canceled. But you're right. If we understand the property interest that's involved, what we really should understand is that the reason I call it a hunting use agreement is because it's not a lease. It's not a hunting lease. It's a hunting use agreement. You're not leasing the land, and that goes to the property interest that's involved. You don't have a right to enter somebody else's property to hunt on that unless you have permission. And of course, if you don't get that permission, you could be sued for trespass, either from a civil side or perhaps even a criminal trespass statute. Or if there is an unlawful hunting statute, which some states have, it's a special type of statute, that also carries criminal penalties to it. Now, in Kansas, I would say this, and this is true in most other states. If you're licensed to hunt, you are allowed to pursue wounded game on somebody else's land without permission in order to capture that game. So let's say you shoot a deer, you shoot a turkey, and then it moves over onto somebody else's property that you don't have permission to be on, but you can go get that game. Now, you have to leave the premises if that landowner requests you to. And so I think in that situation, the best approach for landowners is not to approach the hunter. Just call the sheriff, and definitely never personally try to force the trespasser off the land with threats of physical violence or at gunpoint. That's a big no-no. Don't do that, guys, because you don't know how people are going to react. But what this is, what engaging in hunting is you have a license. You have a limited license to use that property for a hunting purpose. And if you don't have that permission, which is the license, then you are a trespasser. So you are a licensee is what the law calls if you're on the premises with permission. And of course, that can be terminated at any time by the person who created the license, the landowner, by simply denying permission to hunt. So it's not a leasehold interest. You don't have any interest in the property itself. You just have an interest in a use right. And so it's not really, it never invokes the farm tenancy statute in Kansas. You're not entitled to notice to terminate the hunting right, those types of things, because it's not an interest in property, and that is a key point to understand when it comes to hunting rights.
One of the things too on this, and if you charge a fee as far as hunting on your land per se, is the insurance that you would probably have, or the coverage of insurance that you would need for that too.
Yeah, a couple points on that one, Greg. Many farmers will have a comprehensive farm liability insurance policy. That policy will most likely have an exclusion clause for any type of fee-based non-farm business pursuit. And that's what this would fall into. So if you're charging people to come onto your property to hunt or to fish, those types of things, maybe you're running something comparable to a dude ranch operation, maybe in south central, southwest, or western Kansas, and you're profiting from that, your comprehensive farmer ranch liability policy will not cover that activity. So you need to talk to your insurance company, your insurance agent, to make sure that you have appropriate coverage through maybe an additional rider or an amendment to the policy. That's the first point. Now, related to fee-based operations, Kansas has a recreational use statute, and all states have this. Just about every state has a recreational use statute, and those are designed to minimize liability potential for people who come on the farm or the ranch premises to engage in recreational activities, and hunting, of course, would be one of those activities. The Kansas statute seems to indicate that if you charge a fee, if you're a farmer or a rancher, if you charge a fee, you still get the protection of the statute. And by the way, what that protection is it treats the entrant as having no higher classification than that of an adult trespasser, which means your duty to them is to just simply refrain from, as the law says, willfully or wantonly injuring them. But other than that, you have no liability with respect to them. That's the beauty of the statute. Now, if you charge a fee, does it change that? Kansas statute seems to indicate that you would still get the protection of the statute as a farmer or rancher, but it's never been tested. And I wouldn't want to be the first party that tests that. So I would be careful with respect to that. That's where I come back to your question about insurance. Make sure that you have, particularly if you're charging a fee, make sure that you have insurance coverage, because your comprehensive policy probably excludes this type of an activity.
And one of the bottom lines in all this, I grew up in southwest Kansas. How many out-of-staters came in for pheasant hunting season, checking state law with respect to the agritourism statutes and the recreational use too?
Right. Yeah, absolutely. That's always a good thing to do. Make sure your hunters are properly licensed. Make sure that they have the proper equipment, and you have told them areas to where they can hunt and where they can't. And that's the beauty of a hunting use agreement. You can put all that in the agreement and say these areas are off limits. You can hunt here. We want you to hunt only during the state hunting season for that particular game. And then you also want to specify whether you as the landowner have the right to hunt during the time that you have given people a license to hunt on your property. In other words, is it an exclusive agreement or is it not exclusive? Because you may just ace yourself out of the ability to hunt your land when you let other people on the property to hunt it too. So you want to think about all those things. That's a nice thing to about putting this down in writing.
Roger McEowen, Professor of Agricultural Law and Taxation at the Washburn University School of Law, is joining us. And Roger, as well, talking about IRS on providing guidance on the extension of the replacement period under the IRC for livestock sold on account of drought, flood, and other related conditions. But let's talk about that and some of the important things that producers out there need to know.
Yeah, by the end of September every year, Greg, the IRS does give us this guidance on extending the existing replacement period under the Internal Revenue Code for livestock that are sold on account of drought, flood, or other weather-related condition. What this is a very helpful provision in the code, of which there are several, in dealing with distressed sales of livestock. So if you've got drought conditions, or now they've opened it up several years ago to any other weather-related condition, and you have to sell more livestock and more head of livestock in a given year than you normally would, more than your normal business practice, then instead of having to report the income from the sale of that excess number, which would perhaps create a tax problem for you, put you in a higher tax bracket, then you can defer that by under the involuntary conversion rules by replacing the excess head sold with like kind livestock, and you defer reporting the income from the sale until the replacement livestock are sold down the line sometime. Now, normally you've got 4 years to replace those livestock, but if you're in a part of the country that has extended drought, and there's a particular definition in the code for extended drought, then the IRS extends that for a year at a time. And that's what they come out with by the end of September every year, are what we call the so-called drought counties, that qualify farmers and ranchers in those areas that have livestock sales of more than they normally would sell in a given year, the ability to extend that replacement period another year out. Historically, this provision, I think it was about 20 years ago now, has its genesis, might be a little bit more than 20, has its genesis in western Kansas. And that at that point in time, there was a very long, sustained drought, more than a year, a couple of years, and maybe it had gotten up to about 4 years, where there really wasn't measurable rain, and ranchers were really having a tough time. So they were bumping up against what was then a 2-year replacement period. So Congress came in, and it was primarily the Kansas senators that pushed this, and said that the 2 years needs to go to 4. Ranchers need a longer period of time to replace those cattle, because the weather conditions were making it difficult to find cattle to replace within the time frame. And of course, if you didn't replace within the time frame, then you had to report all the income on the excess sales in the year of the sale. So there you got a tax problem. So Congress extended the 2 years to 4, and then said that the IRS has the ability to extend that 4-year replacement period in 1 year additional blocks of time. And again, that's what I come back to. That's what they announced by the end of September, And so for those whose time frame was about to expire at the end of 23, they now have through the end of 24. And there's quite a list of Kansas counties in there that would qualify for this additional relief.
I'm just curious on something, too. When the period begins, is that when the date of the area is designated as being eligible for assistance by the federal government, or is it when the weather-related conditions begin?
Okay, that gets really tricky. Let me try to explain this as simply as possible. The livestock, as I said, have to be replaced with like-kind livestock, and normally that replacement is 4 years from the close of the first tax year in which any part of the gain from the conversion is realized. But again, the Treasury Secretary has the ability and the discretion to extend that replacement period, and that's what they just did. Now, the IRS, the condition there is that if the weather-related conditions that resulted in the federal designation, the drought designation, continue for more than 3 years. So that's where it gets a little tricky. It's not clear when that 3-year period begins. It may begin on the date the area is designated as being eligible for assistance by the federal government, or when the weather-related conditions begin. We really never have had any IRS clarification on that. We are clear on when the 4-year period begins and when it ends and when the extension begins and ends. It's just that internal computation with respect to the 3 years that's a little tricky. And so I would say anybody who's got who sold more head of livestock than they normally would, they need to be talking closely to their tax practitioner to make sure that the return is filed correctly so that they can defer that gain.
Directly or indirectly, you could use Western Kansas as an example this year of the prolonged drought that they were in, but then according to the U.S. Drought Monitor maps, we have several Western Kansas counties now that are out of drought or abnormally dry conditions.
And we've got several in the eastern part of the state that are in it. Greg, just looking at my pond level here, it's been the lowest I've ever seen it since I've owned this place. And boy, we need rain. I got 76/100ths of an inch a week ago Friday, and that's the first measurable rain in close to 6 weeks. And boy, we're dry. And it seems those rains in western Kansas this year have not pushed past kind of the Hutch, McPherson area, and a lot of eastern Kansas is dry. And so there's some of those eastern Kansas counties in the list this year.
All right. Well, Roger, if people want more information about any of the topics that we discussed, obviously, I would assume you have those listed on, are already put up on your blog?
I do. It's posted on my blog. It's also posted over on Ag Manager at K-State, the Ag Econ Department. And there, I have the full list of all of the counties in all of the states. And in fact, 49 states have at least one county in the list this year. It's incredible. I think we went up from 17 last year to 49 this year. And that whole list is accessible in the article.
All right. Sounds good. Well, Roger, as always, a pleasure. Much appreciated. Thank you very much.
Thank you, Greg.
That is Roger McEowen, Professor of Agricultural Law and Taxation at the Washburn University School of Law, as he joins us on the Ag Issues program here on 580 WIBW.